I want to turn now to Chris Rupkey, Chief Economist at FWDBONDS, for more conversation. Now, Chris, I just want to quickly ask you about your reaction to what we just heard Brian break down, particularly that moving just a hair, moving just an inch towards that tapering in the asset purchases, at least with their remarks about the economic progress that we've made so far in the recovery.
Great. We're starting to get there. I think really we're waiting for the Fed to progress a little bit more and understand that their quantitative easing purchases of $80 billion per month since June a year ago, it's the longest stimulus that has been done in any economic recovery from any recession in U.S. history. The magnitude is twice what Bernanke did back in the Great Recession and the recovery from that. I would recommend that at this point, we're just, throwing darts, lodging criticism here to try and get them to move. And they need to start tapering. I would recommend cutting the amount in half from 80 billion to 45 billion Bernanke style very, very quickly here.
Chris, it's Adam. Good to see you. Help us understand this standing repo they've set up. What does that truly mean? What are they signaling? And for those of us who are just normal human beings in the real world, will we even notice anything anywhere because of this?
I must have been, we must be on the same wavelength. I was sitting here hoping, ducking, that no one would ask me about that. Many years earlier in my career, I sat on a repo desk. And I would just tell you, the repo world is a universe, an alternative universe to what happens to U.S. Treasuries, except very, very few times when there's an emergency. I remember the standing repo facility. The only thing I remember about it is that he had been asked about it, like, when are you going to do a standing repo facility? I think, good 7, 8, 9 months ago. And he didn't respond and didn't commit. So, I mean, to me, this means nothing for the average American. It's not going to change where 10-year Treasury yields are trading now or in the future.
Chris, when you look at the Fed now not making a clear move yet on tapering those asset purchases, what's the greater messaging there? Because, I mean, you look at the economy, it is continuing to fire on all cylinders. We've got inflation really close to being white hot right now. We have a white hot housing market. Why does this economy need $120 billion of asset purchases per month?
I don't know. Maybe ask that at the press conference today. Yeah, I mean, it really makes no sense to me. Why is it roughly double the amount that the Bernanke Fed bought of U.S. Treasuries from the last recovery? They've done it longer than Bernanke did. He did it for a year. This argument about transient inflation misses the point. The fact is there is inflation, and there's no evidence that I can see that they've marshaled before that low rates and 120 billion per month total of quantitative easing. There's no evidence that puts people back to work any faster.
All right, we're going to leave it there. Chris Rupkey, thanks so much for being with us.